Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about CHINFMINING interim report. China Non-Ferrous Mining Corporation Limited offers a diverse range of businesses and services, including exploration and mining of copper and cobalt ore processing, and leaching smelting of copper and cobalt ores, sale of various copper products, plus copper cathodes plus blister copper plus rough copper plus copper anodes, sale of cobalt products, plus cobalt hydroxide plus sulfuric acid plus liquid sulfur dioxide. These services are provided across multiple regions, including mainland China, Singapore, Switzerland, Hong Kong, Africa, and Belgium. The stock price of China Non-Ferrous Metals Mining Co. Limited, or CHINFMINING, has skyrocketed by 130% over the past 6 months and 123% over the past 3 months. Several factors have contributed to this significant surge in the company's stock value. Strong earnings growth is one key driver behind the company's success. China Non-Ferrous Metals Mining Co. Limited's earnings grew by 42.3% over the past year, outpacing the metals and mining industry's growth of 30.1%. The company's improved financial performance has also boosted investor sentiment, with its stock rising by 23% in late August 2025 and an additional 16% by mid-September 2025. The company's sector outperformance is another significant factor contributing to its stock price increase. China Non-Ferrous Metals Mining Co. Limited's return over the past year, 69.19%, has exceeded both the Hong Kong metals and mining industry, 105.5%, and the broader Hong Kong market, 51.1%. The company's strong long-term fundamental strength, including a high average return on equity (ROE) of 24.82% and net sales growth at an annual rate of 13.6%, also supports its stock price. Overall, China Non-Ferrous Metals Mining Co. Limited's impressive earnings growth, improved investor sentiment, sector outperformance, and healthy fundamentals have all contributed to the significant surge in its stock price over the past year. The primary drivers of revenue growth or decline can be summarized as follows. Revenue growth is primarily driven by the increase in sales of copper cathodes, 15.6% increase, and global copper price. Additionally, tax exemptions for production facilities and income tax relief for Lualaba Copper Smelter SAS have contributed to revenue growth. On the other hand, revenue decline can be attributed to a decrease in production volumes of blister copper and copper anodes, 30.4%, sulfuric acid, 1.9%, and liquid sulfur dioxide, 85.5%. Furthermore, decreased self-produced sales volume and increased external sales have also led to revenue decline. Net income and profit margins shifts. A mixed bag. The first half of 2025 saw a notable change in the company's financial performance. Net income increased by 11.4% to $570.3 million, a significant improvement from the previous year's $512 million. However, profit margins tell a more complex story. While total revenue gross profit margin decreased from 25.5% to 32.6%, individual product margins showed varying trends. Some products like blister copper and copper anodes saw a substantial increase in gross profit margins, 15.7% to 18.9%, while others remained stable or even declined. Notably, the company's copper cathode margin increased slightly from 45.3% to 45.8%. The mixed bag of results can be attributed to changes in revenue from different products and an overall increase in gross profit for total revenue. This nuanced shift highlights the importance of examining individual product performance alongside broader financial metrics. The company is generating a significant amount of positive operating cash flow. In the first half of 2025, it generated $525.9 million in net cash from operating activities, and for the full year 2025, this figure was $525,901. Additionally, the operating cash flow was reported as $48,687 and $1,353,433 for 2 separate periods, all of which are positive indicators. This confirms that the company is producing a substantial amount of cash from its core operations. The company's debt level and interest expenses have undergone significant changes in recent periods. Debt levels have decreased substantially, with external borrowings down compared to the same period last year and total bank and other borrowings decreasing from $30,176,000 to $9,838,000. This reduction is likely a result of the company's efforts to manage its debt and improve its financial position. Interest expenses have also decreased significantly, with finance costs down by US $5.1 million and interest expenses reduced from $6,253 to $1,225. The decrease in interest expenses can be attributed to lower finance costs and external borrowings, resulting in a more favorable interest expense profile for the company. Overall, these changes indicate that the company has made progress in managing its debt levels and reducing its interest expenses. Management is optimistic about the company's future prospects despite facing challenges. They plan to expand into Central Asia by acquiring a stake in the Bengkala copper mine, pursue high-quality development through new projects and mergers, and potentially hedge against interest rate risks. This indicates a strategic focus on growth and diversification. The company's financial summary reveals that it has engaged in two key activities related to shareholder value. Firstly, the company has paid dividends to its shareholders, as indicated on page 43 of the report. This demonstrates a commitment to returning profits to investors and rewarding their loyalty. On the other hand, the company has not undertaken any share buyback initiatives, as stated on page 44 of the report. This suggests that the company is prioritizing reinvestment in its operations over repurchasing existing shares from the market. Concerns over inventory buildup and supply chain disruption. The company's financial summary highlights two key concerns that warrant attention. Firstly, there is an impairment provision for inventories in cobaltous hydroxide, indicating potential issues with inventory management. Secondly, a period-over-period decrease in sales volume of self-produced and sold copper products suggests supply chain disruptions or inefficiencies. These factors may indicate underlying problems that need to be addressed to ensure the company's continued success. That concludes the financial summary for CHINFMINING. Feel free to comment below, and I will be happy to answer them when possible.